After some crazy runs lately, there's no question that SPACs are back. In this video, we're going to talk about why we believe that BRPM is going to be the next big one. Let's get into it. Welcome back to the Hourglass Trader, where as time passes, we make money. Now, for those of you that follow us, you know that we sell options. Buying and holding a stock is a little bit outside of our main strategy, but through our option selling strategies, we've actually learned a lot recently about SPACs, and it's about time we put that knowledge to work. When we came across this one, it was just one that we couldn't pass up. So for full transparency, we purchased shares at about 1084 piece. So let's talk about why we did it. First off, for background information, BRPM is the special purpose acquisition company, the SPAC that's taking the Faze clan public, and they brand themselves as a leading gaming, lifestyle, and media platform. And that transaction is going to go through, looks like Q1 2022. So we've got a good couple months before that transaction comes through. Now let's talk a little bit more about SPACs in general and why we think this is an attractive investment. So off the bat, this is the chart for BRPM, and it's trading at about 1097, looks like about 1080 after hours today, but just below at $11 a share. And what we can see is we have this typical SPAC chart pattern where it's leveling out right around $10 a share, just south of that, before running up. And if we look at different SPACs, we see that that's actually a very common pattern. Like if we look at something like Hyliion, we could back up to the 3-year chart. We see a really flat trading pattern and then it shoots up. We could go to something more recent like IRNT, a really flat trading pattern, then it shoots up. And that's really typical for SPACs because what happens up front, what BRPM is right now, is a holding company full of cash, and essentially the cash itself is worth $10 a share. So until the merger, it can't really be worth less than that. So there's this price floor right around $10 a share. So keep that in the back of your mind as we go through this video, because that's one of the biggest parts of the investment thesis here. The fact that there's a $10 price floor, and that's going to last until the merger, which again, we said is occurring in the first quarter of 2022. So to get a little bit more specific about why BRPM, because there's so many different SPACs out there, let's take a look at the filings that they have right here. This is the BRPM S1, the registration statement straight off the SEC's website. And when we scroll through here, the first thing that we're going to see is that there's 17,250,000 shares that are currently trading. So why is that significant? And the answer is because if you look at the volume over the past few days right here, you see that about 10 million, 9 million, 4 million, and those are just the hourly candles that we see right here. That's how many shares are being traded. And when the interest in this is getting higher, almost the entire float is being traded. And that's super important because there's only a limited amount of shares. If people start buying all these up, there's going to be a lot of upwards buying pressure, which is going to drive the stock up. And we already saw it happen a little bit back on October 26th when it topped out at about 1574, but we have a reason to believe that it could go much, much higher. So why do we believe that? And let's talk about DWAC, which is one that's definitely been all over social media lately because it had a run from this $10 price floor that you'll see. And again, if we back the chart up, this $10 price floor, the typical chart that we're going to see with the SPACs, and it ran from that $10 price floor all the way up to 175 at the peak. So the question is, what fueled that? And initially on October 21st, you see this initial run up from roughly, $11-12 a share, closing the day at about 45 a share. And then it really took off the morning after on October 22nd before steadily falling back and leveling off in this, 70 to 80 range. So why did this happen? Again, we could point towards those volume candles. There's significantly more volume being brought here with 83 million, 75, 50 million hourly candles, and that's a big, big, big number. But again, let's circle back to that idea of the outstanding shares. So we have pulled up right here is the Digital World Acquisition Company, DWAC. That's the SPAC that we were just looking at. And for a quick high-level overview, what is DWAC? It's a SPAC, and the company that they're merging with is supposed to be Donald Trump's new social media network. And a lot of the hype was driven around the justification that, hey, it's Donald Trump. He still has this diehard fan base, a lot of these followers. So people thought that that gave this value, and the high amount of volume pumped this really, really high. And what are the fundamentals behind this price movement? Let's again go back to the filings, scroll down to the same section, and we're going to see they have 11.5 million shares for sale. And when you get volume that's far, far, far in excess of the amount of shares that are available for sale, that's when you start to see this really exaggerated upwards movement. Again, super big volume on 11.5 million shares available. If we go back to our guy BRPM over here, it's 17.25 million. So, about 30-40% higher. But again, we don't need to be gunning for this, 17x return at the peak. This is one where we know our price floor is 10, and with BRPM, if I throw it back in here, we're perfectly happy getting even back up to this level and taking our gains right there. So that's the approach that we're going to have going into this. And now to address that question of the outstanding shares that we just brought up, we see that BRPM has 17.25. We know that DWAC, the comp that we're using for this one, had 11.5. But, can things still squeeze if they have more than 11.5? And the answer is absolutely. Let's take a look at QS, which formerly was a SPAC. We're going to have to zoom out a little bit to see that because it's been merged for a while. So let's go to the 3-year chart. And again, you'll see that typical price movement, right? There's this $10 a share roughly range that we see right here. And then all of a sudden the volume starts to grow day by day, week by week. And this thing runs up from the floor of 10 all the way up to 132 at the peak. So this is another one that's similar to DWAC in the sense that it made a triple-digit run on a decent bit of volume. But, our initial concern was that DWAC only had 11.5. We're worried that the 17.25 might be too much. Well, let's take a look at the S1 from KCAC, which was the SPAC that QS emerged from. And if we scroll down to the same section, what we're going to see is that this one actually had over 20 million shares outstanding, which is more than the 17.25 that we have currently in BRPM. So the fact that there's a little bit more here than what there is in DWAC, I don't think is something that rules this type of a squeeze out, especially considering the evidence that we have here was something that had a greater amount of shares trading going up just as high. And again, you see really similar price action up front here to BRPM, where there's this initial spike, it levels back out, and eventually over the course of this is from September up until the end of the year right here, which is interesting because it's a very similar time frame, right? We know that BRPM, as we discussed earlier, is going to be a Q1 merger, meaning it's going to merge in this window from what we're looking at the chart, and we're getting in right around this window right here. So this almost timeline-wise lines up very, very perfectly, which is why QS is another really interesting comparison that we could make for purposes of our due diligence here. And again, jumping back to that BRPM chart, where if we go back to the 20-day, similar to QS, the big initial spike levels back off. And again, it's getting to November, which is where we saw that leveling off in QS. And hopefully for the back end of 2020, that's when we'll see the greater spike if volume picks back up. And one other important point to make is that, you can't have that big type of a squeeze without the shares being shorted, and these are very heavily shorted. In fact, they're listed as NTB, meaning that there are not any shares available to borrow currently on TD Ameritrade. So now that we know about the fundamentals, know about how many shares are outstanding, the fact that it's highly shorted, we've seen some comparisons with DWAC and QS, why do we think this is one that's going to run? What is going to spur that activity and that excitement and buzz that's going to make the short squeeze set off? So let's get into that. And again, just as a disclaimer, I really tend to stay away from the short squeeze thesis. What we're really falling back on as our core investment thesis here is the fact that we could get in on something that should be decently popular with the basis under 11 a share, and knowing that really our floor over the next couple of months is 10. So that in a sense limits our loss and gives us a couple months to sit back and wait for some sort of big squeeze type event. So let's get into why it could hypothetically make this big run. And that discussion is going to fall back to Faze Clan itself and talking about the merits of the company and what's going to drive this interest. Now, I think it's always interesting to start the discussion with something that might be a little bit more of a detracting point, and we can address why we think that's not an issue and move on to why we're super bullish on the near-term future of this SPAC. And the first issue that potentially comes up here is the fact that this is a roughly $1 billion valuation for Faze, which is an enormous, enormous number. And I was really having trouble wrapping my head around this valuation until we stumbled across this comp that we found online. And basically what we see here is, Faze is in this space of advertising and generating all of these impressions and engagement with a younger audience. So there are three interesting comparisons here with Facebook, Twitter, and Snapchat. So like we just mentioned, the Faze equity value is about $1 billion, which was something I had trouble, wrapping my head around. And for this graphic, they've conservatively used 120 million active daily users. However, we've got some graphics later that show that their reach is far greater than that. So when it comes down to it, their dollar value per user is just $8 per user based off this valuation when compared to Snapchat, Twitter, and Facebook. It's 316, 227, and 472 respectively. And even more interestingly is monetization per user. Theirs is down at 42 cents, where Snapchat, Twitter, and Facebook have 9, 19, and 47 respectively. So I think there's definitely a lot of room for growth from a valuation perspective when you take into consider what they offer and consider comparable companies in the market. Not that they have their own social media platform, so it does make sense that they fall short largely on these numbers, but I think there's definitely some room for growth as there is some overlap between what these companies are trying to accomplish and where they generate their revenue from. And I mentioned at the top of looking at this graphic that 120 million users is a little bit conservative. Why is that? And if we take a look at the graphic that we have right here from the Faze investor presentation, they actually have about 363 million total followers. And as far as individual brands are concerned, they are the third largest brand by following, which is incredible, behind only the Lakers and the Golden State Warriors. So if you imagine all of the engagement that all these pro NFL, MLB teams are getting, only the Lakers and the Warriors are getting more engagement than them. So there's really no denying the huge reach of audience that they have. And again, keeping these numbers in perspective, they have 360 million followers. There's only 17 million shares that are currently trading on the market right now up until the merger through the end of 2021. And in their own individual space, they are really by far the leader in that esports area, which is something that we see continue to grow year after year. So if you're looking for an investment that targets that area, this definitely fits the bill, and you're getting in on really the largest entity in that area. And just beside their following, looking at some of the investors that they had in Series A, you've got some crazy names on here. You've got LeBron James as an investor, Yo Gotti, Sway Lee, for those of you who are following along in the rap game. And really the amount of high-profile celebrities involved with Faze, both as people who have been signed on to Faze Clan and people who are involved in the investments, really ensure that the Faze name is going to be at the forefront of social media. And what better tool to promote purchasing and investing in a certain company than social media? So that's really one of the biggest reasons why we are comfortable with this over the next couple months and think that we could see some big price action. And now circling back to the top of the video when we talked about that DWAC comparison, right? The big point that people were trying to make with that comparison is the fact that, hey, look, Donald Trump, he has all these followers, so when he creates this social media network, they're all going to follow him, and all those people are going to pile in. That's going to create value, and just that alone really, combined with the smaller amount of shares outstanding, was enough to drive interest and shoot this thing way, way, way up. And again, remembering that we're in right now below 11 a share, and you could still get in below 11 a share at the time that we are recording this video. So any sort of gain along the way on the stairs up here is going to be very, very significant from a percent return perspective. But following that logic that created this spike is the fact that Donald Trump has this big base. Remember, we said that Faze has 350 million followers. And commenting on that base, the United States has 329.5 million people as of 2020. And we could maybe think half, maybe less than half, because he didn't win the election, support Donald Trump. So that would give him about 160, 170 million followers at the top. And just that interest alone drove this kind of gain. Remembering what we looked at a second ago on these investor presentation slides, Faze has a social reach of 350 million, which is over twice as much as that hypothetical group that's supporting Donald Trump. So I think the idea of having this buzz behind the stock, having a supporting base that's going to invest in something they believe in, combined with targeting that age range where a lot of people attribute the AMC, the GameStop, those kind of squeezes to these quote-unquote Robinhood traders who really fall right in that demographic. I think this is the perfect storm of, one, being able to get in a little bit early on something that could be big like this, and having an investment over the next couple months where the promotion of it will do its job for you, just because of how prominent the people involved and the brand is. So again, right now it looks like we're a little bit behind the spike, and obviously we would have loved to be in a week or so ago and take advantage of the spike up to 15, but if we start to zoom out on the y-axis and get up, this is even just 50, this little spike looks like nothing in the scheme of things for where, there could be precedent for it to run to in the coming weeks and months. So that is what we've based our investment thesis off. And now the question may be, what happens when the merger comes? What's the exit plan here? And I really don't personally want to hold these through the merger, because with SPACs, once you hit that merger date, the concept of the price floor goes out the window, and some of these can go pretty poorly. And not saying that this is one that's going to happen, but it's always important to have that downside risk in mind. If we look at something like Ride, you see this big $10 price floor, it runs up to 30 and is now back down at $5.16. RMO is another one off the top of my head, where it leveled off at that $10 price floor. And again, common theme, there's this big run up front when they announced the deal, and there's all this hype. And since the merger, there's been a really big drop, and it settled down at 442. So post merger, these things can drop down below 10 and put you at a little bit more risk. So as far as our exit plan, we want to be out of this trade before the merger. But the hope is that between now and then, in the meantime, we're not going to have too much downside with that $10 price floor, and we set ourselves up with a really good time frame being the next couple months between now and the merger in Q1 2022 to sit back and wait for this type of a squeeze. And if we get something as significant as DWAC or QS, I think we are going to be very, very happy at the end of the day. If we do start to get some price action like this intraday, I'm probably going to set a trailing stop loss, because I'm one of those people who's happy taking any gain at all. I'm not sitting here saying, oh, it's going to pump up to 60, it's going to go to 70, it's going to go to 100, 1,000, you're going to be rich. It's the next GameStop, it's the next AMC. I think we're taking a very logical approach in this. So we start to see the run, notice that it's really just all kind of green candles from here on out. So we're going to set a trailing stop loss. If it drops back down, we'll sell our shares. But if it does so with a similar pattern, we are going to be looking at a very good gain by the time we do. So that's our due diligence on BRPM, the new SPAC that's going to be merging with Faze Clan. Everything we've talked about in this video comes together to give us the really bullish outlook that we have on this stock, with some huge potential upside over the next couple of months. If you've made it all the way to the end of the video, thank you so much for watching. If you haven't subscribed, please hit the button below, like the video, leave us a comment if you enjoyed it. If you're jumping in on the investment with us, let us know. It's always fun to trade and win together. But we've got a free Discord server where you can come and learn the option selling side of the game that we like to teach. And we've also got a Twitch channel where we stream every Sunday night at 9 p.m. Eastern, so you could join us on there as well. But until next time, this has been the Hourglass Trader, where as time passes, we make money.